Okay, so we're on to depreciation next. Don't forget that Neela traded in her car, and her policy is that she does not apply any depreciation to an item that is being sold. So you can see it there, no depreciation in the year of disposal. Okay, so given that situation, this motor vehicle that we have in the trial balance previously, this one up here, this motor vehicle at cost that we had at the beginning of the year, we're not doing any depreciation on that, but we are in fact going to do the depreciation on the new vehicle, because when she buys a new vehicle, we're going to record depreciation for that. So policy is to apply depreciation fully in the year of purchase and none in the year of disposal. Okay, so what do we need to do first? Let's go with the easy ones first, and we'll do the premises and the fixtures and fittings. Okay. So let's have a look here. So how do we calculate the depreciation on an item? We've got our depreciation on premises is 5% straight line, which means you use cost to calculate it, and fixtures and fittings 10% straight line, so you use cost. So straight away for our income statement, the expense, the depreciation expense for these two guys is the cost multiplied by the depreciation rate. So this year's depreciation is 3,000 for premises and 270 for fixtures and fittings. Now, that's the figure for the income statement. We also need a figure for the statement of financial position. So we look at the depreciation to date, we add it to this year's depreciation, and that gives us the accumulated depreciation at the end of the year. So this was at the beginning of the year, plus this gives us the depreciation at the end of the year. So our figures that we're going to need are, we're going to have cost, we're going to have accumulated depreciation, and we're going to calculate a net book value in our statement of financial position. And we're going to have 3,000 plus this 270 going in as depreciation expense in the income statement. So let's just quickly have a look at the two of those. So here we go. We've got our premises 60,000, accumulated depreciation 9,000, net book value 51,000. Fixtures and fittings cost at 2,700, depreciation 1,080, net book value 1,620. Okay, now we haven't done this one yet. And then in my income statement, later on, I'm going to put it together all of my depreciations, both old and new, and it's going to give me a figure for here. Okay, so let's just buzz back to our workings, and I'm going to say, okay, depreciation now on my new vehicle, not on the old vehicle. Unfortunate that they chose to put this at 10,000 as well, but look, let's work with what we've got. The new vehicle is 10,000. It's on a reducing balance, but there is no previous depreciation, so therefore the depreciation for this year is 20%, 2,000 going into my income statement, and also the accumulated depreciation at the 31st of the 12th 16 is 2,000 because there was no previous depreciation. So the figure for depreciation in the income statement and the statement of financial position is going to be the same. So again, that's where I did this. This is the new motor vehicle, cost is 10,000, accumulated depreciation is 2,000, net book value is 8,000. Now, that's all very fine, but where is the original motor vehicle gone? Okay, where is the original motor vehicle gone? Okay, so we're going to do that as a number 6 working, but we've one final thing to do with regard to this working number 5, and we've got to say premises, fixtures and fittings, and motor vehicle. We've got to add all of those together. 3,000 for premises, 270 for fixtures and fittings, and 2,000 for motor vehicles. So that's 5,270 is the full figure for the income statement that I've got for my depreciation. Okay, so my depreciation, here it is, and it is, pardon me, 5,270. Now, at that stage, the only thing I've left to get through here is this one here, my profit on disposal. I've got to figure that one out. Okay, so what am I trying to do here on this profit and disposal? What I'm trying to do is take away all evidence that we had that older vehicle. Okay, so I've got my 10,000 of original cost, my 4,880 of accumulated depreciation, and I'm literally clearing both of those out to give me a net book value of 5120. Just jumping forward a little bit then, we've got our trade-in value, which is 6,500. We've got our net book value, which is 5120. And that means that our profit on disposal was 1390. Okay, so let's go back then and get our books again, my statement of financial position and my income statement. So on my income statement, I'm going to put my profit on disposal being 1380. Okay, and that was working 6. So let me see, we've got all our workings done here. Yes, we have. So we can work away and calculate our expenses, and from that then we can calculate our net profit. So I'm just going to go right down to the bottom here, and I'm saying net profit, and if it happens to be a loss, it'll be in brackets. Okay, so in this case I am just going to trust that they have done their correct calculations here in your textbook. I'm just going to trust that they have that right, and I'm going to give us a total expenses of 43936, giving us a net profit of 38887. I'm just going to give one little second running through those numbers. 310, 339, 180, 130, 1212, 750. Yeah, okay, so we're all fine with that one. Okay, so this figure here is coming out into our statement of financial position. Okay, so I'll pop him over here, get my statement of financial position, and see where we are. We've got our inventory figure, receivable figure. Oh yes, we've got to do a bank calculation. We'll come back to this now. So in the bank, you were told that none of those items that related to the car had been taken into account. So therefore we've got the bank from the trial balance of 14030, less the car payment of 3,500, which is 10,000 in total for the car minus the trade-in, so 3,500. That's the amount that we're going to pay out of our bank, 14030 minus 3500. So we should have 10,530 as the balance on our bank account. 10,530. That's what we're saying that the balance on our bank account is going to be. So that being the case, we're getting our statement of financial position, popping in our bank figure, which is 10530. Okay, we should be able to total those. When we total those, we're going to add them to the net book values that we have. The total net book values that we have are 60620. The total of our current assets are 55330. So the total of our assets in their entirety is 15950. Okay, so we're hoping, because this is a statement of financial position, we're hoping that all of our assets will equal to all of our liabilities, and we've just got to check that now. Okay, so let's go back to what we already know. The capital figure that we had, we're going to start with that, and we're saying it was 42186. Okay, that came from our trial balance, plus the profit that we have just calculated that we made, which was the 38887. Okay, so plus 38887 minus the drawings, which they told us in our trial balance was 2,693. So minus drawings, 2,693. And that gives you your retained earnings. And what is retained earnings? It's earnings that you haven't drawn out of the business yet. Okay, so whatever you put in, plus any profit that has been made, less any drawings to date. Okay. We have a bank loan, which is 26,000. We've trade payables, which were not amended in any way. So we've got 10,680 there. We already had our wages due. We had our stationery due. And you could put the two of those in accruals without putting them separately. You could put them together as 430 accruals. And then your rental income deferred of 460. And when we total those, it comes to 11570. And when we add all of those together, they also come to 115,950. And that's what you wanted it to come to. Okay, so a lot of workings there, a lot of hard work done, but I just wanted you to see it on paper. From now on I will be doing it on Excel, but I wanted you to see it on paper because it just helps to see, look, what will the examiner expect to see? He'll expect to see calculations like this. He won't expect you to have written down accrued or income statement or any of that. He won't expect that, but he will literally expect that little piece there for rates. That's the calculation he would expect to see. He'd expect to see the working number beside it, and he'd expect to see that reflected on your statement of financial position and your income statement.